Breaking news in the world of real estate, as the age-old debate between renting and buying a home continues to heat up. With housing prices on the rise, many are left wondering which option is best for their financial future. According to recent statistics, the median home price in the U.S. has increased by over 10% in the past year alone, leaving many to question whether buying a home is still a smart investment. As we dive into the numbers, it's clear that this is a critical decision that requires careful consideration. With the help of experts and exclusive data, we will break down the math behind renting and buying, and what it means for your wallet. Welcome to our channel, where we provide you with the latest news and insights on personal finance, investing, and more. If you're looking for expert advice on how to manage your money and achieve your financial goals, you're in the right place. Be sure to subscribe to our channel for more videos like this one, and hit the notification bell to stay up to date on all our latest content. Our goal is to provide you with the information you need to make informed decisions about your financial future, and we're committed to bringing you the best content possible. From mortgage rates to credit scores, we'll cover it all. To understand the current state of the rental and buying markets, we need to take a step back and look at the historical context. Over the past few decades, housing prices have fluctuated significantly, with some areas experiencing rapid growth and others seeing declines. According to data from Zillow, the median home value in the U.S. has increased from around $100,000 in 1990 to over $270,000 today. This growth has been driven in part by low interest rates and a strong job market, but it's also led to concerns about affordability and accessibility. As we move forward, it's essential to consider the potential impact of these trends on the rental and buying markets. Now, let's dive into the numbers behind renting and buying. According to a recent study, the average rent for a one-bedroom apartment in the U.S. is around $1,100 per month. In contrast, the average mortgage payment for a $200,000 home is around $1,500 per month, a 20% down payment and a 30-year mortgage at 4% interest. However, when you factor in other costs such as property taxes, insurance, and maintenance, the total cost of owning a home can be significantly higher. For example, a study by the National Association of Realtors found that homeowners spend an average of $1,200 per year on maintenance and repairs alone. But that's not all. There are also other costs to consider when buying a home, such as closing costs and appraisal fees. These costs can add up quickly, and can be a significant burden for first-time homebuyers. According to a report by Bankrate, the average closing cost for a $200,000 home is around $4,000. This is in addition to the down payment, which can range from 3.5% to 20% of the purchase price. As we'll explore later, these costs can have a significant impact on the overall affordability of buying a home. Now here's where it gets interesting. When you factor in the tax benefits of homeownership, the equation starts to shift. According to the IRS, homeowners can deduct their mortgage interest and property taxes from their taxable income, which can result in significant savings. For example, if you have a $200,000 mortgage at 4% interest, you can deduct around $8,000 per year in mortgage interest alone. This can be a major advantage for homeowners, especially in high-tax states like California and New York. But what about the rental market? With the rise of rent-to-own programs and short-term leasing options, renters have more choices than ever before. According to a report by Rent Cafe, the average rent for a one-bedroom apartment in the U.S. has increased by around 3% per year over the past 5 years. However, this growth has been driven in part by a lack of affordable housing options, which has led to concerns about gentrification and displacement. As we'll explore later, the rental market is complex and multifaceted, and requires careful consideration of the pros and cons. Now, what I'm about to tell you next is something most people completely miss: the impact of technology on the rental and buying markets. With the rise of online real estate platforms and virtual tours, buyers and renters have more information at their fingertips than ever before. According to a report by the National Association of Realtors, over 90% of homebuyers use the internet to search for homes, and over 70% of renters use online platforms to find apartments. This shift has significant implications for the real estate industry, and requires a new approach to marketing and sales. As we dive deeper into the numbers, it becomes clear that the decision to rent or buy is not just about the math, it's also about lifestyle and personal preference. According to a survey by the American Community Survey, over 60% of renters choose to rent because they want the flexibility to move to a new location, while over 70% of homeowners choose to buy because they want to build equity and own a home. These are critical considerations that require careful thought and planning, and can have a significant impact on your overall financial well-being. But what about the impact of credit scores on the rental and buying markets? According to a report by Experian, the average credit score for mortgage applicants is around 750, while the average credit score for renters is around 650. This disparity can have significant implications for access to credit and affordable housing options, and requires careful consideration of the pros and cons. As we'll explore later, maintaining good credit is essential for achieving your financial goals, whether you're renting or buying. As we compare the pros and cons of renting and buying, it's clear that there is no one-size-fits-all solution. According to a study by Zillow, the break-even point for buying a home is around 5 to 7 years, depending on the location and other factors. This means that if you plan to stay in a home for less than 5 years, it may be more cost-effective to rent. However, if you plan to stay for 10 years or more, buying may be the better option. As we'll explore later, this requires careful consideration of your individual circumstances and goals. Now, let's talk about the best strategies for navigating the rental and buying markets. According to experts, one of the most critical factors is to have a clear understanding of your financial situation and goals. This includes knowing your credit score, income, and expenses, as well as having a solid plan for saving and investing. Additionally, it's essential to work with a reputable real estate agent or financial advisor who can provide guidance and support throughout the process. As we consider the impact of the rental and buying markets on our personal finances, it's clear that this is a critical decision that requires careful thought and planning. According to a report by the Federal Reserve, the average homeowner has a net worth of around $200,000, compared to around $5,000 for renters. This disparity highlights the potential benefits of homeownership, but also requires careful consideration of the pros and cons. As we'll explore later, there are many factors to consider when making this decision, and it's essential to prioritize your individual circumstances and goals. So, what does this mean for you personally? If you're considering renting or buying a home, it's essential to take a close look at your finances and goals. According to experts, the best strategy is to start by getting a clear picture of your credit score, income, and expenses. From there, you can begin to explore different options and consider the pros and cons of each. Remember, this is a critical decision that requires careful thought and planning, and it's essential to prioritize your individual circumstances and goals. As we look to the future, it's clear that the rental and buying markets will continue to evolve and change. According to experts, one of the most significant trends will be the rise of sustainable and eco-friendly housing options. Additionally, the use of technology and data analytics will become increasingly important for buyers and renters, as they seek to make informed decisions about their housing choices. As we'll explore later, this requires a new approach to marketing and sales, and a focus on providing value and support to buyers and renters. So, what's next? As we move forward in the world of real estate, it's essential to stay informed and up to date on the latest trends and developments. According to experts, the best way to do this is to follow reputable sources and stay engaged with the latest news and research. Additionally, it's essential to prioritize your individual circumstances and goals, and to seek out guidance and support from reputable professionals. Remember, this is a critical decision that requires careful thought and planning, and it's essential to prioritize your financial well-being. Thanks for watching, and don't forget to like and subscribe for more videos like this one. If you have any questions or comments, please leave them in the section below. We're committed to providing you with the best content possible, and we appreciate your feedback and support. In our next video, we'll be exploring the latest trends in sustainable housing and the impact of technology on the real estate industry. Stay tuned, and we'll see you in the next video.